those spikes are a sign of kind of a less mature asset, and then as it reaches bigger amounts and things like that, you should expect more of those kind of rounded type of price action, unless something extreme happens to it, unless you have a sovereign debt crisis in a major country or war or things like that.
What concerns you about the ETF? What risks do you think confront the potential Bitcoin mission, the real substance and importance of this innovation with an ETF? Do you think those risks exist? Do you think they're overblown? What's your take there?
I take the under on those risks. That's part of why I think it's boring. I take the under on the upside, especially immediately from the ETFs, and I also take the under on the risks from the ETF. And large part that's because there's already like 600,000 coins in GBTC.
Yeah.
And so we're seeing coins come out of that bucket, diffuse into some of these other buckets. They're all at most of them are at Coinbase anyway, except for the Fidelity one, and I think a couple others are at Gemini. And so you're seeing a diffusion of that. I think on average we'll see a net inflow, but as Bitcoin gets more expensive, the amount of coins that can be captured in ETF, even though the dollar amount might be higher, the number of coins is still. There's no the biggest Bitcoin miners in the world have like 4.5% of the network. There's a handful that are like that size, and there are a bunch that are in like the 1-2% range, and then there are a bunch of smaller ones out there. And so the mining side is really decentralized. And unlike staking pools, mining pools don't custody the machines. So what really matters is that mining decentralization, not less so the pool. I think pool centralization still matters, but it matters less than people think. And so the fact that if Grayscale controlled 600,000 Bitcoin and that lets them determine what gets into the next block, that's not ideal. But as it stands, they have very little influence other than helping determining the outcome of hard forks and things like that. And I think that distribution of ownership of power is really important. It's kind of like how the U.S. has 3 branches of government that all kind of serve as a check on the other one. The nodes, the miners, and then the economic holders all kind of serve as checks on each other, which I think is really important. And the other point, that the part that I don't hear enough about, playing that role at a time when people needed it. And so now even if people switch over to the ETFs, that doesn't change the fact that MicroStrategy has a really big Bitcoin hoard now. It might grow more slowly than it did because of the arbitrage opportunities that were available, but they still have it, and they still have a good software business. And so I think they made all the right moves pretty much.
Yeah.
So we have, I think I wrote this question, is basically the way I view this year. There's 3 catalysts, and 2 of them are, the ETFs already happened. The halving will happen in April. And then the third one in my mind is the Fed's behavior, and that's a huge one. It seems as though they've paused for the meantime, and they have plans to lower interest rates in the near future. How much is that? I mean, as you said earlier, the money supply is a huge factor for Bitcoin's performance. How do you see this playing out if the Fed decides not to do that? Do you think that's a major factor for the performance in this cycle, or do you think that the halving in the ETF and just all the other movements that we've already seen, going to affect it? Do you think that the Fed is going to provide the dovishness that we need to see this thing perform?
So I think the Fed is only one input of many into global liquidity. In the U.S., the big inputs are the Fed and the Treasury together. And then globally, you have to consider other major powers, like it's more about how much is being taxed and where it's being taxed from, and how much is being spent and where it's being spent, and then specifically the delta between those two. So how large is the deficit, and who primarily is receiving a lot of that deficit? And they can go together. Like, for example, during the pandemic lockdown stimulus response, you had both. You had the fiscal authority spending a lot of money, but as they're issuing trillions of dollars of bonds, the Federal Reserve is creating new base money and buying a lot of those bonds. And so you're printing money, but then you're also getting it out into the people's pockets. And so, but ever since we started to get inflation, the Fed's been tightening up. So they're saying, okay, we're raising interest rates and we are reducing our balance sheet. But the fiscal side is still, they're not doing like stimulus checks anymore, but they're still running a structural, largely demographics driven deficit. And what makes it complicated is that as the Fed raises rates, it loosens the fiscal side even more because it raises their interest expense. And someone out there is receiving that money. It could be the foreign sector, it could be banks, it could be insurance companies, it could be upper middle class or wealthy people that have a lot of cash
Us in
equivalents,
money markets. Yeah,
Yeah,
exactly.
So people are receiving that money, and that has some propensity to be spent. It's not as rapidly spent as stimulus checks tend to be, but it is income to various entities that can go out and spend it. But it's basically just feeding all that demand that exists for T-bills. And the reason there's a lot of demand for T-bills is because if you're earning 0% on your Bank of America, savings account, but you can earn like 5% in money markets, that's where a lot of the spare capital goes. If it's not needed for working capital and it wants that kind of, risk-free kind of short duration exposure, it wants T-bills. And so right now there's just a lot of demand for T-bills. And so basically what it's like a void of capital that's built up. It's outside the system. And so as the Treasury issues T-bills, they can pull that money back into the system. So it's been offsetting, roughly speaking, the Fed's quantitative tightening. So they're destroying base money, but there's this like extra void of base money that's like been pre-made, and the Treasury's just kind of pulling that back in and roughly offsetting it.
What happens when it runs out, I think, is the main question a lot of people have. What's the next step there?
I think you can risk getting something that looks like 2019 repo spike, which is, I mean, it was a mild enough thing that most people who don't work in finance didn't know it happened. If you worked in finance, it was a pretty major event to watch. But it was like a fire that just kind of burst and then was put out immediately. And timing, but to that quote, I mean, they largely affect a certain area for a certain period of time, whereas technology changes things forever. Like, when they invented refrigeration, that's a permanent addition to the humanity now, as long as we don't have like an entire societal collapse. Refrigeration is now a thing that exists and it spreads everywhere, and it's not going to be undone. And same thing with electrification. Same thing is with the invention of the computer and things like that. These are permanent things. And so, to the extent that over the past century or so, there have been a lot of people complaining about the current monetary system, and they've had very little traction because they've not, you can challenge things politically all you want, but the way you win decisively is to invent something that it's just obviously better and it's permanent and it just spreads everywhere. And so basically, the reason I focus on that a lot is because the invention of Bitcoin really kind of changed the power of the argument. I mean, before Bitcoin, if you looked at what Austrian economists were saying or people like that, it's kind of like you're lobbying the government to adhere to your view. You're saying, hey, you should back your currency by gold, or you should clamp down on fractional reserve banking, or you should, do this or this or this. And